Hey everybody, welcome to the Greg Luchak Show. This is my 7th episode of the year for 2020. And today we're going to be talking about real property investors. It's a calculating spreadsheet that I wrote a number of years ago to analyze my real estate deals. And it actually is what eventually prompted me to write my first book, The Wealth Principle. What I did is when I was taking courses and going to seminars and analyzing real estate, I wanted to create something that I could put numbers in and spit out some answers for me and help me calculate my real estate investment. So I started with a very simple spreadsheet. It would calculate cap rate and income and things like that. And then I just did over time, like over a few months, it got more elaborate and more elaborate and more elaborate. And then I realized, oh, this is something that maybe I could use as an instructional tool. So I started writing a help page for it. And while I was writing the help page, I got this idea, well, maybe I can write like a book or a training manual or something like that. So I just started playing around with that and I started developing stuff, and I created a number of chapters. The first chapter, I called it The Wealth Principle, which is where I got the idea, and I started writing the Wealth Principle, like the chapter for this training program that I was developing with this spreadsheet that I had created. And it turned out to be the book I wrote that I released a couple years ago in 2016 was all based on this. That's where it all started from. So let's get into it, and I'll start walking you through the program and what I did here. All right, so this is when you open up the spreadsheet. And right now I'm using Microsoft's Excel, which you can use. It was written in Excel, so that would be your best opt if you ever decide to pick up a copy of this, what to use. When you open it up, there'll be an introductory page, which basically describes the licensing agreement. Well, I scrolled too fast here, so there are a number of clauses in the licensing agreement. You can click that you read it, obviously read all those parameters. So you'll see, click that you've read all the terms, then you click on Go to Introduction, and it's going to take you to the introduction page. And I call the program my Greatest Business and Investor Training Program. It was just I was playing with that name. So it gives you a little bit of an introduction. Congratulations on getting started, and welcome to RBI Team. Now, RBI stands for Real Business Investors. It's what I call my company that I do all this stuff through. So here's it starts off with a little income calculator. So, what's your desired income, average interest rate, number of years left working. So, you can plug in these parameters. It's going to give you an idea how much you would have to save if you wanted to retire. So let's say you wanted to retire on $50,000 a year. You plug in $50,000. And let's just say, for argument's sake, the annual interest rate would be 3%, whether you get that from a savings account, which I doubt, or, if you put it into a mutual fund, or I would prefer real estate, obviously. This is what this program is about. And how many working years you have left. So let's just say you're a young person, you're in your early 20s, you're going to work another 45 years. If you want to retire with a $50,000 a year income, you put these parameters in, the total monthly required to save would be $3,000 a month for a total of $1.6 million in order to retire. So you can see it's not easy to save that kind of money, obviously, right? That's why investment is a good thing. So this walks you through the introduction. I call this the introduction page. Now you have in this spreadsheet that I've created, there's a quick guide app. We'll get into that after. It's about analyzing a specific piece of real estate with very specific parameters. Okay, and then there's the start page, which takes you to when you want to put in a piece of real estate. You're going to start by putting in the parameters like target property information. So because you get at the end of this, you can actually print out and create a document with everything printed out. So you have target information, contact information, some basic assumptions. You can put in financing costs. So you put all your parameters in here. So under assumptions, and you start with this page because this will populate throughout the program in all this particular areas that it needs to be in. So you can see here under assumptions, you're going to put in the purchase price. If they're in your deal, if there's, cash back to the seller or cash back to the buyer, your closing costs over your asking price, holding costs, you can put in, the effective rental income, utility, property tax, water and sewer insurance, heating, hydro, maintenance, all these kinds of things. Closing costs, you can have legal fees, title search, title insurance, registrations, appraisal, inspection, miscellaneous disbursements, lien, all the costs involved in the closing. You could put it in there as a lump sum, or you can itemize everything because it will populate. Any adjustments, if there's going to be any adjustments, and then you can scroll down to the financing section, and where you would put in, your mortgage principal, the annual interest rate, the amortization, which is the number of years, okay, which it's assumed that there's 12 months. Monthly, it'll calculate your monthly payments for you. If there's any points on your financing, sometimes when you're doing private financing, they want to charge fees, so they're called points. You can put that in there. Over here in your capital area, you put in whatever cash investment you're putting towards the deal. Who the money's coming from, a private lender. Just say, like this, there's a deal in here, it doesn't matter, but 100 grand. Total cash required, it calculates all that for you. And then if you scroll down some more, it's going to talk about creative financing techniques. So there's a little bit of information here on different techniques. Like, creative financing, you can use CMHC mortgage, a wraparound mortgage, an equity mortgage, a blanket mortgage, home equity loan, RSP mortgage. You can defer a portion of the purchase price. You can create a note or paper or to sell for the cash, which means you can create a loan that you could sell and get money back from it. That's really creative financing techniques. You can sell shares in a corporation, debentures. You can joint venture, which is a very common way for people to get started. You can use trust agreements. These are all, you read through them. Vendor take back, a VTB, which is what I used when I bought my first apartment building. Balloon mortgages, bank loans, credit cards, unsecured lines of credit, long contracts, hard money. Hard money, credit cards today are actually hard money. Hard money means any loan that's got high interest, and usually it's like 12% or above. While credit cards are like 19% to 28%. They're technically what you would call hard money loans. Okay, so there's private lenders. So it goes through all these, gives you an idea. You scroll up, and that's the start page. So that's where you start. You put in your basic property information, and it propagates to everything. So on the left side here, you'll see a navigation pane. So then you can go to the property detail, and it's already put in some of the numbers. Like we had a price in there, a list price of $139. Then you can put in specifics about the actual building, like type of construction, the district it's in, lot size, square footage, dimensions, zoning, type mix, title class, age, assessment, all that. Because at the end, when you print something out, all this information gets printed out. Type of heating, water, sewer, all that kind of stuff. Okay, you scroll down, and then there's a section on notes where you can put in some notes. Then you can go and click on the property inspection. So if you did an inspection, you can put all kinds of parameters in here, things that you checked out, like whether it's poor, fair, good, or excellent. And then it's got all aspects of the property: parking, walkways, driveways. So this is the exterior, sprinklers, garden, all the outside stuff, siding, windows, doors. And the interior is talking about hallways and flooring and bedrooms and kitchens, gas appliance, trim, drywall, paint, electrical, all these items where you can specify the quantity, the type, the condition that it's in, and make some notes. Then it's already propagated the information you put in. So now you go to the comparables, and what you can do is you can add in any other properties that you know of that are similar in scope, that have some information like how much it's sold for, how many units are in the building, the date, the approximate of the income and the expenses and the taxes of the building. And you want at least 3 comparables to put in there, right? And then you mark in the number of comparables that you've entered here. Okay, and then you can click on this, and it takes you to that comparable report, right? And then you can go back to the comps module, comparables module. Then you can go to the income calculator. So because you've already put in all your parameters in the property detail. Now it's going to spit out, it's going to print out all the information in an income calculator. You can view the report. So there's the report. It shows the income and expense sheet of that particular deal. So you can go back to the income calculator. You know, and things that you should have, like property tax. These are typical operating expenses in a real estate deal. You're going to have property tax, water and sewer, insurance, heating, hydro, any rental equipment, cost of property maintenance, building maintenance, property management. You know, and you should be keeping a reserve fund. A certain percentage of your revenue should be saved for future expenses, because depending if you have a long-term deal, you know that at some point you're going to be, you know, fixing a kitchen or a bathroom or fixing a floor. Maybe you're going to be replacing some equipment. You're going to be doing a roof. You're going to be fixing windows. Whatever those items are that need to be repaired over a certain period of time, you want to have a reserve fund for those. So it calculates total operating expenses. Then you have your net operating income, debt servicing, because you've already put that stuff in there. So there, in this particular deal, the net income in that property pre-tax is almost $16,000 based on all that information. Then you go to the next calculator, which is the market valuation, and it'll calculate fair market value, return on equity, the capitalization rate, which is probably the main one people use today in assessing their investment properties, cap rate, after repair value, the ARV, the gross operating income, the gross income multiplier, which is something they used to use quite a while ago. It's still used as part of you can essentially create, these are the parameters that, say, somebody who's going to assess a property, give you a market value. These are all the parameters that they're going to look at. Net operating income, gross operating margin, debt coverage ratio, cash on cash return, etc. All right, and then if you scroll down, it's going to show you, well, I can just click on these actually. It'll take you to fair market value. So this fair market value, number of years to double your investment, 14. So here it is here. The fair market value of this property is actually $222,000. Then if you click on return on equity, we're going to scroll down here. It's 199%. The cap rate is 10.97%, which means this property is probably in an area where it's probably a smaller market. The property values aren't they're not keeping up necessarily with market rates. Investment property is based on its business value. It's based on capitalization rate calculates the business value of a property. So in an area that's a smaller market, they don't use typically market appreciation. It's based on the business value. You go to bigger cities like Ottawa, Toronto, New York, Vancouver, all these big world-class cities. Most of the time their properties are sold on pure market value, not necessarily the business value. When you're investing in real estate and you're looking for income, you're going to be looking for properties that will cash flow. In those market cities like Ottawa, like what I call world-class cities, properties don't, depending on how you finance it, you highly leverage a deal, it likely won't cash flow because it's being sold or purchased on its marketability, not necessarily its business value. So that's an important thing to know and understand. You have to understand the markets that you're in. The ARV, or the after repair value, is the next thing that it'll show. So it'll show, because you've already put in the parameters. Now here's where if you wanted to play around with the cap rates, what you do is say, okay, this is calculates at 11.7, but if you put in 10, it raises the value of the property, because in world-class cities typically have a lower cap rate. So say, for example, this property was in Ottawa, because I think these numbers came from a property in Cornwall. It's about 7% cap rate in Ottawa. This property would actually be worth in Ottawa $348,000. But in the market it's in, which I believe it's Cornwall, it's in like the 220. It's over $100,000 cheaper. So you have the gross income multiplier, net operating income, gross operating margin, debt coverage ratio, etc. So you go to the top. Now you can view the market report and it'll break it down for you. The analysis that you use, the cost per unit, comparable sales, gross income multiplier, income analysis based on the cap rate. So it gives you a total and you divide it by 4. The average cap, so the cap rate on this property is 10.9%. It's roughly 4.9 times the income. Has a net operating income of $24,000, about 53%, which is about average. Most investment properties, when you're looking at it, you take the gross income. You want to do a real quick rule of thumb. The average cost to run the building is about 50% of its gross income. So this building is pretty close to that. Gross operating margin, the cash on cash return, almost 24%. Debt coverage ratio, the cost per unit. So in this case, the cost per unit is about $37,000. The cost per square foot, $19 a square foot roughly. And then it has the comparable report. It puts in, so in the report, it's going to show you the properties that you used. Let's go back to the market value report. So you've seen that one. Then you can go and have a look at the performance statement, which is a long-term analysis of what the property is going to generate in revenue. And in this case, I use a 10-year schematic where it goes, so you put in the number, like the year. So this example is from 2014 through to 2023. We already know it's a 6 unit because it got populated from your property detail page. Same with the square footage. And you just put in average inflation rate 3%. Now maybe in the market you're in, it might be average, might be 5%. But in this case, it's lower, so it's about 3%. And so it'll actually calculate for a pro forma statement based on all the parameters of the property, projected return, rate of return, return on investment. I'm just going to scroll down here. Your cash on cash, amortization, it has everything. So this is cash invested. So that you can go and you can select that. That's on a different page. You click there, you go and put, it's on the deal page. You put in your cash investment. So it calculates this. So it helps make your numbers more accurate. So that's the performance statement. Then you can print out a report on that as well. So there's the report on that. Let's go back to the performance statement. So you can see that the spreadsheet is pretty detailed. It's got a lot of components to it. Like, from the property detail where you put it, where you start, put all your property information in. It all populates, the property inspection, the income calculator, everything gets populated through. Now, if let's say you're going to renovate the property, there's a built-in construction calculator. So all the aspects of either building or renovating a property, it's got all, and these are all the schedules. So everything from design plans and permits to direct labor to demolition, excavation, water and sewer, foundation, steel columns and beams, framing, roofing, trusses, siding, windows, doors, electrical, HVAC, plumbing, insulation, drywall, staircases, millwork, painting, flooring, landscaping, kitchen renovations, bathroom renovations, basement renovations. And then this will take you to the bottom, total project costs. Okay, and we'll go back to the top here. So the only thing, the caveat to using this construction calculator is that you have to understand what the costs are as far as like your unit costs. Now I have some basic numbers in here based on things that I've done here in the Ottawa area. Let's see here. So as you scroll down, you'll see where you have a quantity, or you can enter the quantity, you can enter the unit cost. Every market might be a little different. So let's say you're in San Francisco. Well, your unit cost for a backhoe may not be $95 an hour. It might be $55 an hour. Whatever, so you need to do a little bit of research and know what the unit costs are in your market. And once you put all those in, this calculator will calculate pretty closely what it will cost to either create a new construction project or do a renovation project. So let's scroll back to the top here. Let's check out the market research tab. So this here, now I like, you want to base all your information on real statistics. In Canada, you can get free statistics from CMHC, and if you know them from, or you can get them from a realtor, but it's, if you can get them, what you do is you put them in. So you have average vacancy rates. So, you can go and get all those statistics and you can input them according to what's in your property. Like, if you got a studio, a 1-bedroom, a 2-bedroom, a 3-bedroom, you can put in and over the years, you can put all those parameters in on that research, and it's going to create a market analysis of the rental in that area, for example. So that's a neat little tool that can give you some information. You can print out the research report on that, and that's kind of what it'll look like. That you can put in an opening statement here, rental statistics, in any city in Canada, United States. So whatever you put into that research module, you get them from your local market. In Canada, CMHC does it by every market in every city across Canada, and it's free to get. Okay, and actually I'm not sure if the link is still current, but cmhc.ca/en for English / and then corp/li/index. That may have, but you can do a simple search at CMHC to find this stuff if that link doesn't currently work. Then you can do a business analysis. Now, if some of you because sometimes you buy a property and it comes with a business in it. Maybe it's got a hair salon or whatever. You want to analyze the business. Or maybe you're thinking of having a business on the side. There are tools within the program here where you can do business analysis. You can enter the financial information. You can click here. So it takes you down to this section where you can the number of shares, years in business, current liabilities, current equity or fixed assets, the current operating cash, the liquidity of the business, the gross income of the business, the net operating income, any existing debt service, the annual net adjusted cash flow. If there's any venture capital in the deal, what's the percentage of a venture capitalist in the deal? Is there any investment required? Do you have to put money into it? Projected sales growth, percentage of ownership. Do you only own 60%? Do you have partnerships? Is there any royalties involved? You put this information in here, and then it'll populate and it'll create. You can check what the financial risk is. You can again check the capitalization rate of the business, the operating leverage of the business. What else do we have here? Debt to equity. And we'll just scroll down here. It's a little easier. A quick ratio, which is current liquid assets divided by current liability. So it'll create numbers for you to analyze. Now, maybe you don't know how to analyze the numbers. You not understand. But this is all stuff that you can learn. And this spreadsheet is like a learning tool for you to learn all this information. Venture capital valuation, the book value of a business, the liquid value of the business. You have to understand, say a business has a liquidity, say it's worth something on paper because of what it earns, but is it really worth that? And typically it's discounted. Okay, so if you had to sell off a business, you're not going to get dollar for dollar. You're going to get 50 cents on the dollar. There are ways for you to determine the value of a business, whether it's the liquid value, the book value, the cap rate. So there you go. So then you have what we call the purchase calculator. Now you're going to start analyzing your deal. This is when you start analyzing the deal. Like I told you in the last video, there are basically 5 strategies to invest in real estate. There's the rehab and flip, the rehab and hold, the buy and hold, wholesaling, or lease option. So you can go through these. The numbers have already populated. Let's just check this deal out under the rehab strategy, rehab and flip strategy. So it'll tell you, based on the numbers, the projected sale price is $221,000. The purchase price is $120,000. You're buying it at basically 54 cents on the dollar. So that's a good purchase. Because if this is a renovation project, which it is, you don't want to pay full pop. You want to get it at a discount so that you can make some money on it. There's the cost, like the mortgage, the balance of the down payment, the rehab cost, in this case, $37,000, marketing cost, almost $9,000. Holding costs, financing, it takes all the costs involved, and then it tells you the total cash that was required in this deal was $73,000. The adjusted cost base, which means what it cost you for the deal in the long run, $182,000. So your actual profit and loss on this deal as a rehab and flip will be $39,000. with a basically, and your analyzed return on investment 53%. So this is a really good flip project. If we want to do, you can go back to the top, or you can scroll down and go to the rehab and hold strategy. The numbers are going to be similar, but now you're holding it long term. So in this case, maybe after you've renovated, you want to refinance it and pull some money out. So in this deal, you're going to refinance based on the new value, and the available cash out at refi, you're going to pull $55,000 out. It cost you $73,673 to get into it, but after the rehab, you can pull out almost 75% of that, $55,000 on the roughly $74,000 that you put in. So this is also a good strategy for this particular deal. Okay. And again, you can click on the report. You can print out a report. We'll go back to the calculator. We'll go back to the top here. Let's check out just a simple buy and hold strategy. In this deal, okay, fair market value. It's got everything in here. So your return on investment in 1 year, 118. The analyzed return on equity in the year is 566%. Cash on cash, 88%. The cap rate, 20%. Now, cap rate's really high, so you got to wonder. I believe these numbers were from a property in Cornwall. So the market there is a lot slower. The properties tend to be cash cows, but they don't tend to be in good shape, especially in the downtown core. So properties can have an issue, but they can make a lot of money just the same. Okay, so buy and hold, it depends on your strategy. Now, wholesale strategy. Say you don't have the money, but you found a deal. Well, you can sell the deal. It's called, they're assignments. You can buy a deal, and what I tell people is, if you're using a company, you use your company name. So you put XYZ company, comma, in trust. So when you write in trust, it means the deal's become a trust deal, which means your lawyer can now, at the closing, assign the deal to anybody. So you become a trustee, and your benefactor will be whoever you assign the trust to. So you become a grantor, and you assign so that's how you can flip. It's a way of flipping. People call it, it's a way of flipping without any money, because you don't have to put any money in the deal to make an offer if you know you're going to sell the offer. Okay, so this analyzes the numbers based on selling the offer. There's what you negotiate for the assignment fee, the legal costs involved for that. So how much money that you can make assigning the deal. Now, usually it's not a lot of money. It's, maybe $1,000, a couple $1,000. Sometimes it's more than that. Depends on the size of the deal. If you're doing like, this is like, it's a couple $100,000 deal. So you're not going to be making big money on it. But, if it didn't cost you anything, you put $1,000 net in your pocket after expenses, that's that's an infinite profit margin, because you didn't put any money in the deal. But let's say it's a $500,000 or $1 million deal. Well, maybe your assignment fee, your finder's fee for flipping the deal to another investor, maybe you're going to want $10,000 or $20,000. That's all negotiable. So there's making money in real estate using like what we call a wholesale assignment. And then there's the lease option strategy, which I don't do. I've never done one, but this explains how lease options work, which basically you lease a property like a rent-to-own from somebody, then you put a tenant in it with the same deal. So what happens is you're going to give a deposit to the owner. You're going to basically have a lease option deal with him. And these are called sandwich lease options, this example. And then you're going to get a tenant who's going to basically buy it from you. So this will walk. Now, I'm not going to spend a whole lot of time teaching lease options here, but this is another form. It's built into the spreadsheet so that you can learn about lease options. Okay, because I'm showing you the spreadsheet. I'm not doing a training on how you can use a particular strategy in this particular video. So, but there's the 5 strategies under the purchase calculator that you can use that analyzes your deal, that all started with you just simply putting in the information from the deal in the property detail. Then you can go to the reports page, where you can click on all the reports that you can generate out of this deal. Again, then there's a help section. And in the help section, it'll explain what some of the word, when you go to let's go to the property detail. No, well, let's check another one here. Comparables, quick guide app, actually. When you click on market value, it's going to take you to a glossary that'll explain what you clicked on, what it meant. Okay, and then you click, go back. Let's go back to the top here. So it's the spreadsheet, and there, see cap rate. Like you can click on any of these. It'll take you to a glossary. You know, that's part of the help section. Then there's the actual, so on the side you have the navigation pane for the real property investor and like the calculator. Then you have what's called a quick guide app, which you can do real quick. You put in some basic numbers like the asking price, what you think the market value is, the number of units, the purchase price, the loans in the property, what you think the closing costs are. If these are numbers that you know, you can put them in, and on the right side, it'll give you the results. It'll tell you what the net operating income is, what the debt coverage ratio is, what the return on investment or the cash on cash, the cap rate, the cash to close required, the allowable debt service on the property, which is that'll tell you how much it can afford to pay on an annual basis towards a mortgage. The gross income multiplier, which nobody really uses anymore, but it's there. The cost per unit. This is the income per door. And then there's leverage. Well, you're leveraging 54% of the deal. So, but this is a very quick guide app. So then, like I said, and then you can go back to the start page, which takes you to the property detail. You can also put in things here like your power team. You know, there'll be another video about your power team, but these are all the people that you're going to rely on in your real estate business, like a business lawyer, real estate lawyer, you know, maybe a realtor, maybe you have a trustee if you know anything about using trusts. Private lenders, mortgage brokers, bankers, tax professionals, accountants. There's a whole list here of people that will be considered part of your power team that you can put in here. And then there's an actual training program built in where there are a number of There's a PDF library that I've written on various topics. How the wealthy do it, planning your business, independent business ownership, marketing the lifeblood of a business, real estate opportunity of a lifetime, real estate investing 101, rehabbing for profit, shaking the money tree, credit squeeze, distressed property, the foreclosure process, understanding contracts, landlord versus investor, and then you've got finding that one in a million, life in the trenches, homestead. Then there's a home study test, and then there's the complete manual. Because in this, you can actually test your knowledge. So that it's an actual training program, but it's a real tool that you can use to analyze deals. And like I said, this is something I started out with. That it was just a little one-page spreadsheet, and I just kept building on it and kept building on it and kept building on it. Now it's like it's part of a training program that I've created that you can get for very cheap. In the very near future, I'm going to be offering it. I'm not sure exactly the price. I'm still toying with that, but stay tuned. If you're interested in getting a copy of this, it'll be very inexpensive, and there'll be details about that on my website at gregluchak.com about how you can get your copy of Real Business Investors. It's an awesome tool and showing you how to get started. Well, not just get started, but how to assess the numbers in your deal. Is it a good deal or not? Can you make money on it? And then there's some information on, getting started and learning more about real estate investing. Okay, folks, we're going to wrap it up today. Just going to tell you a little bit about an upcoming episode. I believe on my next video, I'm going to be talking to you about the wealth principle. Unleash the Entrepreneur Within You is a book I released back in 2016. As you know, we just talked about real property investors, which is kind of what spurred on that book. So I'm going to talk about the book. Maybe we'll go through a couple of chapters, and that'll be my next episode. Will be about my first paperback book I released through Amazon, The Wealth Principle, Unleash the Entrepreneur Within You. So as always, check out, go to my website, and you can click, you can buy a copy of the book that I'm going to be talking about next week. You can, as you're watching the video, you could be reading part of the book. You can also click on the link at the top of the page. It's an Amazon link. If you plan to be doing any shopping online, you click through the link from my website, I'll get a referral fee. It'll help you support the show. As well, you can also go to the GoFundMe page that I've set up on behalf of my wife, Christina's Story. You can support what we're doing through that as well. So there are many ways for you to support. I'm always looking for people to come on the show and talk about your projects. Do you have a real estate deal you'd like to talk about? Why don't you come on the show and we can talk about it? Or a renovation project that you've completed, maybe you want to showcase it. Maybe you're starting a new business and or you've had a business for a little while. There's another way for you to market your business. Come on the Greg Luchak Show and we'll talk and expose your business to the world. So as always, I hope you enjoyed the show. You have a great day and you keep crushing it.